Day 42 of the daily dollar cost average for Bitcoin. And again, I'm just going to get right into it. Do your conversion, $333 from DAI, the stable coin, which is like a bank account. Over to Bitcoin itself. Preview the conversion. Okay, so there you have it. And we'll just take a quick look at the portfolio. And I have $16,516.66 or 22.74% of a Bitcoin in my portfolio with some Chainlink, Cosmos, Algorand, etc. Anyway, so this is one video I just wanted to share. I saw this last night. And as you know, you may or may not know what's going on right now is that everyone's talking about Cardano, that it's not on Bitcoin, the platform I use. That's just like, I'm using like the retail one, but the Bitcoin Pro, which is like more for the hardcore traders, Cardano was rolled out on that platform, and everybody was anticipating really high, prices for Cardano because they figured, Coinbase is the biggest exchange that people are going to have access to. It was going to take off, and this was essentially the not just the assumption of amateur investors, like a lot of people who are technical analysts and so on and so forth were saying this, but it went exactly the opposite way. It started going down, and if you look, because it just happened yesterday, and if you look at Cardano, let's go back over here. So where is it? Cardano. I don't know if I can get it on here. But anyways, Cardano went down. Not a big deal. But, here it is. Sorry, here it is here. See, if you look at it, 1.56, it went down almost 12% in 24-hour period. Everybody was anticipating that it was going to go parabolic. It actually went down almost 12%. I don't know what the low point is. Yeah, see right here, excuse me, went down to 151. So it probably went down like 13, 14%, 15% at 8:30 p.m. last night. So anyways, again, this just exemplifies why you daily dollar cost average, because you can't take anybody's word for it, because plain and simple, nobody knows. And all it takes, especially in something like crypto, because it's not really that huge of a market, it just takes one or two players to dump something and they can change the entire momentum of the market. But anyways, listen to what this guy has to say. We've listened to him before. And again, I'm not saying this guy's wrong, and I'm not saying he doesn't know what he's talking about or anything, but he is a technical analyst, and this guy prides himself on his technical analytical skills. And he looks at the 6-day moving average, 8-day moving average, 20-day moving average. Like he says, it all comes down to moving averages when they line up and so on and so forth. So again, I'm just trying to illustrate the fact that these guys, as convincing as they sound, because they make it sound like a science. They make it sound like they got it all figured out. They know what's going to happen before it happens and so on and so forth. I'm just going to run the tape, and you can make your own decision. Just listen to what this person has to say, and I'll interject as I see fit.
Cardano price down, and why in the world is it down on the day that Coinbase Pro decides to list ADA? What is going on the charts? In this video, I'm going to break down just that and also answer the important question: should you be worried? What's up, everyone? Welcome to Crypto Capital Venture. Hit the subscribe, hit the like, turn the notification bells on for the very best technical analysis. I do videos every day, everybody. This is it. This is Cardano's down a little bit. And I just first want to start with this. Just zoom out on the charts. And if you've been along for the ride, this is like just another move on the Cardano charts, another move in crypto, everybody. These things happen all the time. It's nothing. And that's just my opinion. Today, I was sitting around watching the Coinbase Pro listing. My buddy came over. It was like a watch party. We were excited. I was bummed out that Cardano tanked. However, not surprised. Not surprised, really, if you think about it. And I want to just break something very important. I want to break it down for you. In the video earlier today, before it was going live, a few hours before, I talked about the potential for a really realistic price target of $1.85 area. And you can see me speculating a 30% rise for Cardano. On the Coinbase chart, this wick.
Okay, so right there, he's setting the stage right now, so he can say either way if it goes up or if it's go down. Oh yeah, I predicted that. This is what I don't understand about technical analysis. To me, if you're a technician, if you truly know something, you can say it will do this because of this and always be right. So he's saying, well, I kind of said, yeah, it was going to go up to a 30% increase, but it might go down. Then what's the point? And that's called guessing. That's not, you know what I mean? That's not a science, water freezes sometimes at 0 degrees, but then sometimes it boils too. But I know exactly how it works. Like, can you imagine somebody saying that's a scientist? It might boil, but it might freeze, But anyways, he's just opening the door for him to say, yeah, what I said is exactly what I predicted, even though it did the exact opposite. But I kind of alluded to it, Like, anyways.
Is like right around $1.88. Now, on the flip side to that, in the same video, and I spent a lot of time in the video earlier talking about downside. And that's a weird thing to do on the day when Coinbase Pro is going to be listed. But there were some technicals that I just could not ignore, and I wanted to share the data with you because these things can happen in crypto. So we simultaneously basically hit the target to the upside, and simultaneously on other exchanges and charts, we have dipped to the downside. Right now, this is a Binance chart, but you can see Cardano well on its way to the target we were talking about. Now, that target is that, if all else fails, support, crazy dip for Cardano when I was doing the video. And that video was $1.43 when I did it. Right now, Cardano, ultimately dipping to $1.17 or so. Now, in that video, I was discussing the fib retracement from the swing low to swing high. And we have kind of this support area. And you can see, if I zoom in here, we almost basically touched the 618 line of that support area around $1.16, going down to $1.07. That entire channel, everybody, so crucial for Cardano. And so, am I surprised that this dip is happening? No. There are a lot of people in crypto, and when you have these hype type of environments where the masses are anticipating a certain type of move, when the move doesn't happen, people freak out. Namely and mainly, weekends freak out, and that's kind of what's happening, and we're getting consolidation. Let them sell is what I say. This is a zoomed in chart. What's so powerful about, and we're going to talk about the charts more, but before we do, what's so powerful about today, I don't know if you've seen this article. It's such a good read. Read through it. I'll put a link in the description. Cardano's $1 billion futures open interest shows ADA is a serious contender. Cardano's Coinbase listing helped push the open interest on its futures contracts above 1.
Okay, now I want to talk about this futures business. Okay. Now, this is where I think things are going to essentially be like, it's like the old cliche. The more things change, the more they stay the same. See, the whole idea of crypto was that it was supposed to be a deviation from the corruption of Wall Street and so on and so forth. Because these guys on Wall Street, they have these back deals going on, like naked short selling. A company will declare bankruptcy. The bondholders become the equity holders. The equity holders get nothing, but the company keeps running. They issue new equity, so on and so forth. It's like there's so many scams going on Wall Street, and it's usually endorsed by Washington. Anyways, so now he's saying, okay, Cardano future, $1 billion futures open interest shows Cardano is a serious contender. Now, when you start going on the futures market, that's traditional capital markets. That's the corruption that you're trying to get away from. And this is what I find is going to be dangerous for, Bitcoin especially, but all the cryptocurrencies. Because what happens is when you have these derivatives, these synthetic forms of investment, that's going to take away from the like the purchasing power of the actual underlying asset itself, right? So what's going to happen is this is where it becomes like a casino. When things go into the synthetic, so people are going to be betting on the performance of an asset, not on the underlying asset itself. And that is where a lot of money is going to flow, right? So some people might say, you know what? I don't really understand Bitcoin. I don't trust it. It's encrypted. I don't know about these exchanges, but I trust the CME, the Chicago Mercantile Exchange. All right, this is, Chicago Board of Exchange or something like that, the CBOE, or when any sort of, more serious SEC backed exchange or something like that, right? But what happens then is that then it's like a synthetic form of investing. It's like betting on sports. If you bet on sports, doesn't mean the team gets any of the money. It's just it's between two counterparties, right? It doesn't, like, this money isn't going to go into investing into Bitcoin or any other currencies. It's just going to be a zero-sum game between two parties. And once they start doing that, and this, I think, is what's scary about it, especially something like Bitcoin. Like, okay, somebody like myself or, 99% of other people couldn't manipulate it. You just don't have enough money. But I'm saying, let's say you're a whale. Say you have like a couple $1 billion in Bitcoin. If you also have money on the futures exchange and you say, I'm going to dump Bitcoin right now, you're going to make money on futures, because if you short it, and you pull your money out, it's going to go down. Like if you have a significant amount, right? And then what you could do is with your profits, buy your Bitcoin back and then, shark it on the way up, right? So anyways, but this is the sort of thing. I don't really like the idea. Like, people are saying it's bullish that these cryptos are going on to the futures exchanges. But again, you have to remember that is essentially betting. That's like going to Vegas betting on a sports game. That's what that is. And people will say, well, it's a risk mitigator and so on and so forth, which it can be. But the way that the guys, especially if it's at the point where Wall Street can't buy the underlying security itself, they can only get into the futures market. This is where I see could potentially have some problems. But again, it's going to come down to who can you pay off in Washington. And if and you get idiots like AOC and whatever, they don't even understand, the futures market. They don't understand the capital markets in general. You give that idiot a couple of bucks, she'll sign anything. And but this I do see being a potential problem, is, and which is kind of strange that you can bet on an underlying, but you can't buy the underlying. It's really strange how this is playing out. But anyways, that's my rant for today. So again, we bought some Bitcoin. We talked about Cardano. That's about it. So again, Cardano's down, significantly. Everybody thought it was going to be doing great, but that's just the way it is. So anyways, I'll see you tomorrow and have a great day. Take care.